Thanks for tuning into BQ Conversations with me, Neeraj Shah and Muralidhar Swaminathan. And we are in conversation, or we are inviting onto the conversation a very noted guest, Mihir Vora. Needs no introduction. He joins us to talk about his thoughts on all that's happening in the markets, including, of course, what we've seen around the elections, the US debt ceiling jitters, and the post-earnings season verdict on what is in store from an earnings perspective for FY24. Mihir, great having you. Thanks for joining in. Lots to digest. Can we start off one by one? The fact that the markets have not had a reaction in a very dramatic fashion to what's happened in the state of Karnataka, is it a precursor to the markets telling us that, hey, state elections will not result in as much volatility as a lot of people in the markets have predicted it to be in 2023?
So the state elections typically have a lot more local topics and local issues based on which each and every state has been fighting the elections. And while of course this is a setback for the ruling alliance, I don't think it has a long-term impact on the equity markets because as the state issues are quite different from the central issues, and probably the prism with which voters look at the national parties versus the state elections is different. Having said that, it obviously serves as a beacon to what the priorities of the broad electorate are, and there are some messages to be taken away. But I don't think it's a immediate worry for the equity markets, at least.
Right. Mihir, thanks for joining us. I'm Murli here. Basically, I understand how the markets read state elections. We have all seen this in the past. But this time around, the problems look slightly different because for BJP, it was only Karnataka in the south. Now, that is also on shaky grounds. Going forward in the next 1 year, elections are coming up little closer to the general elections. I mean, the state elections are coming up, MP is there, Rajasthan is there, Chhattisgarh is there. Now, that could suddenly come up and give us a different picture at the ground level than at what we look at from the macro perspective.
Fair enough. But again, if you look at the vote share, the ruling alliance actually managed to increase the vote share. It's just that there was a larger amount of consolidation within the Congress camp. So to that extent, the seat mathematics turned out better for the Congress. But actually, the vote share loss was not there. So, I mean, it's a complex situation, and given the fragmented nature of our political parties, these small shifts and consolidation of votes do have a disproportionate impact on the seats. So it really has to be looked at from that angle.
Right. Well, one more question that we have all noticed in this election is the promise of freebies. That worked a lot, and the fact that there were some sensitive issues, the question of Kannadiga pride, the Nandini versus Amul, because Nandini is so important to all the farmers at the grassroots level. Do you think that we will see more populism in the run-up to the general elections and other state elections?
That risk always remains. The urge or the impulse to go populist against electoral headwinds. So that risk would remain. Having said that, we've seen a lot of cycles of populism, and there are obviously pluses and minuses. But in general, if you see the fiscal profligacy issue has not really been that bad for India over different governments. So yes, there is a immediate risk of that, but I would not say that it is something that can really structurally change the situation on the fiscal situation.
Right.
The other thing is that the election results are not so much of a surprise because they are pretty much in line with the feelers and the surveys which were available even 3 weeks ago or 5 weeks ago. So to that extent, there was already expectation of certain amount of shift, and this is one state where I think in the last many cycles, the incumbent party has always gotten ruled out or voted out. So again, it's the same pattern. So it's not so much of a shocker, I would say.
Yeah, absolutely. The strategy that they adopted is something that has really helped them. They worked very hard on the ground in spite of the general expectation that anti-incumbency would come in. But one more interesting point which Neeraj and Neeraj, you keep alluding to, is that populism could also mean higher rural income.
Yeah, so actually, that's me just wondering, I was about to ask that question. I'm glad, Murli, you invoked it. The budget was a bit of a surprise in that it was not as populist as people would have thought it would have been. A lot of focus on infrastructure. I wonder if this would make large portfolio, large money managers like you kind of preempt some bit of social spending and therefore realign portfolios slightly, maybe towards FMCG, maybe towards rural spending beneficiaries, if at all. Do you think that is a possibility?
I think that would be too early,
Okay.
one day after the, yeah, we'll need to really see the commentary and the analysis and see whether, because see, I mean, the BJP-led government in the center has been around since 2014. So it's not like the first time elections have happened, there have been setbacks in certain items. So, and broadly, even in the worst of the COVID situation, the government did manage to hold on to its at least, basic theory of fiscal consolidation and lack of profligacy. So I think one election should not really be such a big issue as far as course correction is concerned.
Okay, fair call. Lest this sound like just an election conversation, it is not. So we've done that part of the conversation. Let's also try and pick your brains on some other stuff. There is a lot of talk about this US debt ceiling and what impact it could cause, not just for the US markets, but also the collateral impact on the Asian markets as well. What are your thoughts around this? Will it get resolved for sure because it's such an important thing, or could it have some meaningful ramifications for risk assets?
I mean, we see this circus so many times, and it's not the first cases. So I mean, they make this hue and cry, and there's some song and dance, and ultimately they need to keep the economy running. So I mean, the US has trebled its Fed balance sheet size in the last 12 years, and obviously they have hit the ceiling many times, and every time they move on. Because the point is that there is no other way but to print yourself out of this debt situation in the US. So they will have to come around, and I don't think that's a risk. Of course, it's a risk, but that's not my base case. So we are not really factoring in that risk in our portfolio positioning.
Okay, good that that risk is kind of out of the way, and it's a drama and circus which keeps happening every now and then. Let me shift the focus back to the Indian markets. Some very good positives, elections aside. Earnings are good, inflation is cooling, cost of funds coming down, and I guess some pressure might be there on margins in some sectors. But do you think that we will hit all-time high once again before, let's say, November or December or before the elections?
It is a possibility if credit growth continues to do well, because the largest amount of earnings is from the financial sector, which is doing well. We don't see any margin issues or NPA issues, at least for the next few quarters. IT may disappoint a bit, but if the consumption story and if the domestic capex cycle continues to grow, then it's possible that we will see earning upgrade. And given that markets have not done much in the last almost 12 to 15 months, means valuations have corrected, have normalized, and there is a good chance that we might go to newer highs. But that will be based on domestic strength of the economy, not global tailwinds. I think globally there will continue to be headwinds, and my base case would not be that markets hit a new high very soon because of the global headwinds. Otherwise, the local economy is doing well.
Right. Neeraj, you are an advocate of mid caps and small caps. I think those pockets are something that we need to watch.
Yeah, I mean, it certainly seems to be a theory that a lot of market participants propagating, and that will be, at least from my final question to me would be around that, because we're just wondering if an index stays range bound or flattish, and I've heard you use this term, a range bound market, in the immediate future, Mihir, in the past conversations. So just trying to understand, if indeed the market stays range bound but doesn't crack too much, is there a possibility that a lot of beneficiary sectors or earnings displaying sectors could actually do meaningfully well over the course of the next 6 to 7 odd months of this calendar?
Certainly, I think it doesn't have to be in mid cap. There's a lot of large caps where there is also possibility of earning. getting upgraded. Because I mean, we have mandates across asset classes and of course across market caps, and we can go up to almost 30% in mid and small caps. But we are actually at about less than 15%. So we're not really finding very exciting ideas in the mid cap space based on valuations. While earnings growth is there, a lot of them are demonstrating good earnings growth, but in those good quality counters, there is little valuation comfort.
Okay. Where in large caps means, just trying to understand. Of course, this is not a stock specific conversation, but where within the large cap pocket, thematically, do you believe that there is a chance of good earnings display and possibly earnings upgrades as well?
So I think the biggest overweight for us is in the industrial sector, based on government spending, which is construction, cap goods, etc., and defense space. That's where we have the biggest overweights. And I think the way government is serious about indigenizing defense production and continue to spend, especially in the election year, on the road building and the infra building, I think we will continue to see maximum visibility in these pockets. That's where our maximum overweight is. The other overweight, of course, is in the private sector financials. Earlier, it was more towards banks, but now we have a good mix of banks and NBFCs. NBFCs, of course, with the peak of interest rate tightening past us, things can get easier for the NBFCs, and they are available at reasonable valuations. So banks, private sector banks and NBFCs is another pocket, apart from the industrials and the defense-linked spaces.
Okay, Murli, before you ask Mihir your final question, it's interesting that Mihir is pointing out defense, because we did this conversation with on Inside on Friday, and the management was extremely constructive about the kind of growth in orders and execution that could happen over the next 2-3 years. So kind of ties in very well with the conversation that we've had on Friday.
Okay, one last question, Mihir. What do you expect from the Fed and what do you expect from the RBI? Will the pause continue, and will Fed finally come and say that we will pause in the next meeting?
RBI, I think there's a good chance that we may hit a pause because inflation is still broadly while on the higher side, but not something that we are not comfortable with historically. Fed may actually continue to tighten a little more before they start cutting, because inflation out there is still stickier than expected, and growth is also stickier than expected. So both inflation and growth in the US have been stickier. So to that extent, there might be some more tightening to go before they start loosening.
Okay. Mihir, Vora, always a pleasure talking to you. Thank you so much for taking the time out and being with us today on BQ Prime.
Thank you. That was a pleasure.
Thank you. And viewers, thanks for tuning into this edition of BQ Conversations with me, Neeraj Shah, and my colleague Mulidhar Swaminathan.
Thank you.